It's all of the above. Whenever people get worried or confused, they buy gold or silver. And that's happening again. This has been going on for a few thousand years, and gold and silver have always had an attraction to people throughout history. I mean, remember Jesus Christ? He was sold for 30 pieces of silver because silver was the money then. Silver was the valuable asset then. And those sorts of things are starting to happen again. And somebody is buying gold and silver because they see that problems are coming.
This is no surprise, as gold and silver continue to gain momentum amid rising global debt and escalating geopolitical instability. The world is facing a crisis where financial uncertainty is driving investors away from traditional markets and into safe haven assets. The conflicts involving Russia and Ukraine, as well as Israel and Iran, have heightened concerns about global stability, fueling speculation that commodity prices, particularly gold and silver, could surge to levels never seen before. With central banks printing more money to sustain economic growth, inflation remains a significant threat, further boosting demand for precious metals as a hedge against currency devaluation. Jim Rogers believes the bull run in gold and silver is far from over and expects it to continue for at least another 2 to 3 years. Rogers highlights that excessive money printing has become a standard tool for governments to keep their economies afloat. As debt levels climb higher, confidence in fiat currencies weakens, prompting a global shift toward tangible assets like gold and silver, which have maintained their value for centuries. Rogers is particularly concerned about the long-term stability of the US dollar, stating that he plans to sell off his holdings in the coming weeks. He points out that central banks in emerging markets have already begun diversifying away from the dollar, reducing their reserves in favor of gold. This shift reflects broader concerns about the future of the dollar as rising debt and inflation erode its purchasing power. Many nations, particularly those looking to reduce reliance on the Western financial system, see gold as a more reliable store of value compared to the increasingly volatile dollar. Before watching the video, subscribe and hit the bell icon to stay updated with our latest uploads. We'd love to hear your thoughts, so comment below.
Whenever people get worried or confused, they buy gold or silver. And that's happening again. This has been going on for a few thousand years, and gold and silver have always had an attraction to people throughout history. I mean, remember Jesus Christ? He was sold for 30 pieces of silver because silver was the money then. Silver was the valuable asset then. And those sorts of things are starting to happen again. And somebody is buying gold and silver because they see that problems are coming. And I say, I bought a little more silver yesterday. Well, of course it's realistic. Maybe not this month, but certainly this decade. There's no question about that, if not before. All over the world, central banks are printing money. All over the world, governments are running up debt. I'm not the only person who knows that. More and more people are realizing we better do something. Well, it's partially because silver is not on everybody's mind the way gold is. I mean, if you turn on the TV, you open the newspaper, the first thing you read about is gold, because that's historically, traditionally, the safe haven. As far as I can see, that's the only reason now that it's not both, and that both aren't going up. But silver has certainly moved up. It hasn't moved up as much as gold. And if I were going to buy one today, I would buy more silver, but I would buy more of both before this. As far as I can see, China is going to be the most important country in the 21st century. It already is in some sectors. It's happening. And yes, this has happened often in history. 100 years ago, it was Britain, and then it became the U.S. Unfortunately, for us, I think it's now changing again. And the world is now moving to a Chinese-centric economy. But I repeat, Kai, this has happened many times in history. It's certainly something to be concerned about or aware of, but it has happened often. And I hope we all live long enough to see it happen many times in history.
Well, with that, I'm suggesting, I'm not trying to put words in your mouth, but given a 100-year cycle, do you think the U.S. has 20 more years, maybe 19 more years to go before its tenure is up?
Well, 10 years up, that's a deep statement. If we were sitting here in 1954, we would have looked ahead and said Britain is coming to the end. And it was. There's no question. We can look back and know that Britain was at the end of the road and things were changing. But did the world, I mean, you and I both continue to be alive? Britain continued to exist? The world continued? Yes. Britain lost its status. The U.S. is going to lose its status. But will we still go to Paris for holidays? Will we still do things that we did before? Yes. Yes. Some of us will still continue to prosper. So I hope you and I are two of those people.
While gold has already reached record highs, Rogers sees even greater potential in silver, which has yet to reclaim its previous peaks. He argues that silver's historical price trends indicate that it is due for a major breakout, making it an attractive investment at current levels. Silver is not only a monetary metal but also has industrial applications, further supporting its long-term growth potential. Rogers believes that as economic uncertainty persists, silver could outperform other assets, providing investors with significant returns in the years ahead. Despite the rising popularity of cryptocurrencies, Rogers remains skeptical, dismissing them as speculative assets with no real intrinsic value. He argues that unlike gold and silver, which have been used as stores of value for thousands of years, cryptocurrencies are purely trading instruments that lack a fundamental purpose. While digital assets have gained traction in recent years, Rogers does not see them as a reliable hedge against economic instability, preferring the safety of precious metals instead. Alongside his concerns about fiat currencies, Rogers is also wary of overheated equity markets. He warns that stock markets are currently trading at dangerously high valuations, with too much capital flowing into speculative investments. He believes that this is a sign of an impending correction, and that a sharp downturn in equities is a real possibility. As markets become increasingly volatile, Rogers advises investors to prioritize assets like gold and silver, which have historically performed well during times of financial crisis.
A lot of U.S. dollars, not because it's a sound currency, but because I see some turmoil coming down the road. And in times like that, people look for a safe haven. History says that people think the dollar's a safe haven. It's not, but people think it is. So I own U.S. dollars. I hope when the time comes, I'm smart enough to sell my dollars. Now, Kai, what you need to do is say to me, okay, when you sell your dollars, where are you going to put your money? And my answer to you is, I don't know. But one of the few times in my life, I don't know where to put my money. I don't see a competing currency for the U.S. dollar yet, and I'm trying to find it. If you know, don't announce it out loud, please. Send me a private email, because I'm trying to figure out where to put the money if and when I sell my U.S. dollars. Driving it higher is gigantic money printing all over the world in the last few months, years, and that has continued. Yes, they've cut back the money printing in some places temporarily, but Kai, I mean, I read the same newspapers you do. I see that people all over the world continue to print a lot of money. And historically, that always eventually leads to more inflation. And if you look at the debt situation in the U.S., I mean, it is really startling. It's more than startling. It's frightening. I don't know how the debt could possibly have gotten so high, and it continues to go higher. Nobody seems to notice. Nobody seems to care. So the debt situation is part and parcel of this problem, and it's getting worse. I mean, the debt in the U.S. is unbelievable, and has certainly never happened in history. When you say 36 trillion, that's what's recorded. That's the own balance sheet. But there's a gigantic amount of off-balance sheet debt. I mean, over 100 trillion. I mean, the numbers just cannot be comprehended. And nobody seems to. First of all, Washington doesn't even count them. They report the 36 trillion or whatever the number is, but they don't report the 136 trillion with all the off-balance sheet numbers. Nobody has a chance to succeed. The numbers are overwhelming. The smartest guy, I mean, whoever you come up with is going to have problems dealing with the U.S. debt situation. This is not talking about Scott. This is talking about anybody and everybody, because the numbers are staggering and overwhelming. No country has ever had a situation like this, and I don't know what's going to happen. You know, 100 years ago, It was Britain, and people said, oh, don't worry, the British pound is the gold standard for currencies. Believe it or not, 50 years later, 1976, Britain was bankrupt. They went from number one in 1925 or whatever that was to totally bankrupt in 1976, bailed out by the IMF. It has happened before in history, often, and it's going to happen again. I don't like saying it, but I can see what's coming. It's still going on. But I think I see signs that we're coming to an end. Whether I see it or not doesn't matter. I know that this economy will slow down somewhere along the line. I know that historically we're getting there already. And when it happens, it's going to be terrible because the debt is so unbelievably high now. And we're all going to scream.
Gold and silver remain at the center of financial discussions as global instability and mounting debt push investors toward tangible assets. With rising inflation, increasing geopolitical tensions, and concerns over excessive money printing, these metals are seen as reliable stores of value in uncertain times. While gold continues to break new highs, silver holds untapped potential, with historical patterns suggesting a significant upward movement. As traditional markets show signs of strain and central banks shift their strategies, the appeal of precious metals is only strengthening. Share your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for being part of our community.